This is Alan Bush with ADMIS. Seeing a little pressure coming into stock index futures this morning. This as economic reality starts to set in again with the outlook for China's economy apparently weakening. Also, we have some renewed concerns about the economic situation in the Eurozone. There's more and more talk that the recent announcement from the Fed concerning the third quantitative easing plan is, for the most part, already factored into current pricing. We are seeing recent economic numbers showing some pressure in the U.S. economy, and that there's a growing belief that even though we do have this very massive easing of credit from the Fed that is targeting the employment situation, in reality there may not be many gains in the situation as a result. So we feel any surprises in the stock index futures market are likely to be to the downside, and it looks like this third quantitative easing plan that some analysts are calling QE infinity, since it is open-ended, will not have the desired impact. So once again, any surprises likely to be to the downside in stock index futures. In the foreign currency markets, seeing the euro currency under a little pressure. This as questions remain whether or not Spain will ask for a bailout. Also undermining the euro currency is downward pressure on Eurozone interest rates. And there's more talk that the European Central Bank could, at one of the next upcoming meetings, actually lower their benchmark interest rate from the current 75 basis points. So that would be a negative if they were to actually cut rates. So the Australian dollar under some pressure after the minutes of their most recent policy meeting revealed that they are concerned about the labor situation in Australia. There's more pressure on the Reserve Bank of Australia to lower interest rates. So that undermining the Australian dollar, especially relative to the Canadian dollar, which seems to be holding up relatively well since the North American economy is relatively stable. From here, I would expect the Canadian dollar to continue to gain on the Australian dollar, which it has been over the last 4 weeks or so, and also over the last couple of days. Credit markets doing better today, with the risk off trade coming back into play. Talk of a weaker global economy, a bullish factor, general problems within the Eurozone and China, all of this contributing to a better tone to the credit markets. And from here, I would expect follow-through gains in Treasury futures led by the long end of the curve. And once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
If the Fed does QE3, I think there will be some concern